Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his good friend, Mr. Jonathan Twomley. How you doing, sir?
Doing great, Michael. Thanks. How are you?
I'm doing wonderful. I sit here knowing that we are entering a bad time, a recession, a bear market, whatever you want to call it, housing depression, certainly in the residential space. But that's macro. I operate in the micro, meaning Olivia and I, our family. And I'm vibrating with excitement. If you've been watching my channel for any length of time, you know I was recycling capital. I was stacking cash below 4% via cash out refis and the like. And now I'm getting excited. I just closed on my first deal on Monday, and first deal out of the MLS in over 3 years. My first deal at all in 12 months, maybe 11 months. And this is just a sign of what's coming. So I'd love to talk to you about where you see opportunity coming, because there will be plenty of it. It will be hidden behind some pain or issues, but I know for certain there's a lot of opportunity coming. So I'd love to hear what you have to say on that.
Yeah, absolutely. There is going to be some great opportunity in the multifamily space, the likes of which we haven't seen in quite some time.
Yeah.
Now, before I get into what it is, I'll tell you what it isn't. We're not going to see like a wholesale crash in this market, right? Uh, However, we are going to see, we're already seeing a shift in the balance of power between buyers and sellers. And we are definitely going to see some foreclosures and some workouts uh, among deals that were bought at the top of the cycle and had bad debt structure, right? And those deals are going to, some of them will hit the brokerage firms, but they will probably only be sent to the strong buyers list, and
Mhm.
some of them will never even get that far. They'll just go through the banks, and the banks will take them to their buyers list. So they will, that stuff will lead to a softening of prices overall, but the real like sweetheart deals are going to be the ones that you get off market. So how do you get those deals, right? That's the big question. You have to be making relationships with brokers and REO officers like right now, right? Before these things hit. You have to be networking with those people. The brokers are a little easier to find, obviously, because they're all over the internet. The bank folks are harder to find, honestly. So you've got to start kind of working your network to find out who those people are. If you know people at your local bank, start talking to them about, well, who handles their REO assets, right? Their real estate owned assets. Who handles their workouts, and try to get to meet those people. And just, what they're going to be looking for is your ability to close those deals, right? Because they don't want to just have like another problem on their hands, because either, you can't close, and that means they have to hold the asset longer because they don't want to run these things, or they don't want to get them back in 6 months or a year, right? So you need to be able to show them that you can close, but networking with them is really critical. So I would be reaching out to those people, and like bridge lenders, people like that. I mean, you want to try to get in touch with the folks who, originated these loans and maybe taking them back, right? So that's where the real opportunity is going to be. Um, but overall, I think you're going to, the softening trend that you're seeing is going to continue, because with interest rates the way they are, cap rates have to go up, right? You can only have negative leverage so much. And it's interestingly enough, on the negative leverage point, so there's a lot of people in the business who are like, oh, negative leverage, no big deal. We're going to get rent growth. We'll grow our way out of the problem. And if you don't know what negative leverage is when your interest rate is higher than your cap rate, right? So basically what that means is your return, normally you put debt on a property to enhance your return to equity. If you have negative leverage, your returns actually go down, right?
Mhm.
So it's better to do the deal all cash than to have debt. But that's tough because most people can't do a deal all cash, right? So uh, a lot of people say, oh, well, negative leverage, no big deal, because we're going to have rent growth to get us out. But there was an article that came across my desk today on Globe Street that was talking about the fact that the rent growth assumptions necessary for a lot of these properties to kind of work their way out of negative leverage are like 6 to 11% annually. And we know we've had rent growth like that, but nobody underwrote. I mean, nobody who wasn't a fool underwrote that kind of rent growth. right?
Yeah.
But even if you didn't underwrite it, but you're hoping secretly to get it, ain't gonna happen, right? Because we're already seeing right now rent growth flattening or even turning negative in certain places. And so those assumptions are just, uh, you know, not going to be borne out. So
Yeah.
the negative leverage situation is going to force cap rates up, and that will in turn cause pain and opportunity. Cause pain for people who badly structured their debt, or an opportunity for you, because you'll hopefully be buying some of those deals. So when people go to refinance and they refinance really low interest rate debt into much higher interest rate debt, they may not be able to cover it. So they're
Yeah.
going to be forced to sell. So look
Yeah,
out for those.
I think there's a lot of things that are probably common in your space and mine, that, small residential stuff, and see if you agree or disagree with this. First and foremost, there's a lot of newbies that came to both our spaces that will be washed out, right? They maybe in your world, maybe they were the new syndicator who had a bunch of tech friends that each chipped in 100 grand to go buy something out of state that they never went and saw, which I've seen people do. There's a lot of those deals that are going to go bust, and maybe they don't go bust, but maybe they just have to hold them longer, right? They talked about getting your money back in 3 to 5 years, and now they're going to have to sit on it for a decade or 15 years. It's there's a lot of people that got in the game that did one or two deals that won't do anything else going forward. In my world, there's a lot of people that tried to do burr or flips that got over their skis. They're going to get hurt. In my world, there's a lot of people doing Airbnb and non-prime A properties that are going to get hurt. There was just a lot of people. Actually, Patrick Bet David from Valuetainment is talking about this here recently, and I agree. Basically, there's a lot of fools that look good because the market made them.
Oh yeah.
And now the market's going to undress them. And to Warren Buffett's quote, they're going to be shown to be swimming naked when the tide goes out. So I'm excited for the froth to come off. I'm excited for less competition. Again, in video one, I think I talked about getting my first deal out of the MLS in 3 years. I look every day. And to finally close a deal after looking for over 1,000 days in a row was just awesome. And it was listed for a long time. And we just wrote up an offer that was 25% under list price, and they took it. I'm like, damn, this is going to be fun. So there's a lot of good things coming if you pay attention.
Yeah, I mean, listen, I think that there'll be a lot of opportunity in the small multifamily space too, right? You don't
Yeah.
need to be the big syndicated deals to take advantage of this, because there are, just as many, if not more, people who got into the kind of multifamily, craze, buying smaller deals, buying, sort of 5 to 20 unit deals, right? And maybe
Yeah,
they
I
themselves or
agree.
with a couple of buddies, right? And they don't necessarily know what they're doing, right? I think if things get at all difficult, those are going to be the people who really fold, right?
I
So
agree. I think that it's actually I'm glad you brought that up. I don't think the opportunity, at least for guys like me, are in the 100 unit plus. I think the pains, you're absolutely right. 5 to 20. I was thinking 5 to 40 units. These are deals typically taken down by an individual or maybe, 3 or 4 partners. That's where I see some real opportunity coming in the pretty near term.
yeah, I think if you're looking in that space, right, the kind of the ideal deal, so to speak, is your out-of-state buyer, right, who is attempting to kind of self-manage from out of state. Right?
What are you doing? Yes.
Yeah, I mean, people do this. It's astonishing. People do this with bigger deals too. I mean, it's kind of incredible to think about.
Wow.
They do it in every asset class. I mean, yesterday I was having a conversation with my hotel manager about how we can take advantage of this situation. He was telling me about some guy in California who bought 10 hotels in Florida and manages them absentee, and basically is like running them all into the ground because he, like, didn't go with a flag, which means who knows what kind of management company he's got in there. And so now he's selling them because he, didn't know what he was doing. So even like really, really wealthy people do this too. They think they're smarter than everyone else, right? And they can run it themselves, and they don't need to pay a management company and all this kind of stuff. And they know better than you. I made $1 billion in tech, so therefore I'm smarter than you are, right?
Right.
You get the same thing. You get the doctors who's like, I went to medical school.
Mm.
I'm smarter than you. don't tell me what to do. I can manage this myself. I'll use technology, right? Or
Yeah,
whatever.
right, right.
And so I think there's going to be some great opportunity in that space. And I think, one of the ways that you can start getting kind of on the radar of brokers. This is a strategy that you have not been able to pursue for 10 years, but this worked really well for some people at the last recession. I got in a little bit too late to take advantage of this, but I remember talking to an older, more experienced investor who had just made a mint doing this. He just went around to brokers and said to them, "What deals do you have that never closed?" Right? Not like, what are your secret deals? What are your pocket listings? What did you have like last year that didn't get sold? Right. And the reason for that was that you had essentially in a lot of cases, a seller who was either like now really desperate to sell, or like completely resigned to getting a lower price, or maybe really in desperate straits, right? And now ready to deal because they had asked too much. Every deal will close at the right price, right? No matter what
Yes.
the economy is like. The economy can be in the crapper. Deals will get done as long as they're priced correctly, right? So the deals that don't get done are the ones that are mispriced, where the sellers are too greedy, right? Or their lenders won't let them do a short sale, right? So, but there's a clearing price for every deal. You just go to the brokers and ask them about that stuff. And first of all, they're going to, especially if it's a broker that got into the business in the last 10 years, they may be a really experienced broker now, but they're not old enough to remember this happening. You're going to stand out just like, because nobody's asked them that question, right? And you can solve a problem for them, and you can help them get a commission on a deal that they'd already written off in their minds.
Yeah, I think that's a great idea. I can pivot and use the same thing for residential, right?
Yeah,
Go to the agents who's, have listings that are, 90 days, 180 days old, which there are a few today, but there will be a lot more next year.
but you don't even have to
Yeah.
look for those deals. You can just tell them like, hey,
Yeah.
you have any deals, like, because the deals are already gone, like they're not even listed anymore. Say,
Oh,
hey,
I got you. Yeah, yeah, yeah.
do
I
you have
like
any
it.
deals that never closed from last year?
I got it. Yeah.
Did they get sold? If not, like, what happened? You think that seller would be interested in selling now? Can I make them an offer? You
Yeah.
know,
Can you represent me? I like it. Yeah, I like it. I'm gonna write that down. Very cool. Well, Jonathan, do me a favor. Where can people find you for advice and suggestions as we go through this interesting time? I know you will be keeping us all updated.
Yeah, well, you can go to my free Facebook group, which is called Multifamily Investment Community, or you can join my email list at apartmentinvestorsclub.com. You can get a free download there. That's really cool. You see past episodes. I don't have it with me today because I'm home, not in my office. You can also Google Two Bridges Asset Management to get on my investor list. And I just want to tease that we are going to be changing the Facebook group, and the new Facebook group, which is going to be part of Apartment Investors Club, is going to have a really cool free video series in there. So when it's open, you'll be able to go in there and get that free video series. And if you want to find out when it opens, the best place to be is on my list already. So join my email list or get into my Facebook group, and you'll be able to find out when that's available.
Awesome. I look forward to it. Thanks, buddy.
Absolutely.